Social Security is currently the largest liability to the U.S. government. Over 70 million Americans depend on Social Security for their retirement. The Congressional Research Service's 2024 annual report highlighted that the Social Security Fund will only have a positive balance until the year 2035. The only solution suggested thus far has been to continuously raise the full retirement age and reduce benefits in real inflation adjusted terms. This will not solve the core issues of the program, but continue to kick the can down the road while our everyday lives become more difficult. This program is in a very dangerous place right now, on the precipice of failure. How do we save Social Security? Bitcoin bonds. How would Bitcoin bonds work? In 2023, the US government collected roughly $1.4 trillion in Social Security taxes. That equates to over $100 billion in collected tax funds per month. These funds are typically reinvested into government debt, which, even with higher interest rates, still pays a lower annual percent yield than the inflation rate. This means officials are mathematically forced to raise the full retirement age and to decrease benefits in real inflation adjusted terms in order to sustain the program. Can we make Social Security great again? Yes, we can. The US Treasury would announce a monthly $100 billion auction for Bitcoin bonds. This special monthly Bitcoin bond issuance would not require the open market to lend money to the government. Instead, the Social Security tax would be directly allocated to the principal protected note. As a result, the US government would raise $80 billion per month in 5-year Treasury notes at 4.5% APY. The remaining $20 billion of the Bitcoin bond raise would be directly allocated into spot Bitcoin. It's important to note that the Social Security Fund itself would now be the owner and beneficiary of the government's issued Bitcoin bonds. This is where the magic happens. Upon maturation of the 5-year note, the $80 billion of the original $100 billion of Social Security tax income lent into the bond with interest applied would mature at a value of $100 billion. So the principal amount lent to the government for Bitcoin bonds, or $100 billion, will always be protected and secured by the full faith and credit of the US government. This means that it's the price performance of Bitcoin, the best performing asset in the world, that creates the yield on the Bitcoin bond. This is where things get really interesting. Let's run through some price performance hypotheticals to gauge potential performance. We'll start out with the worst case scenarios. Over the last 10 years, Bitcoin has a compounding annual growth rate of 60%. But let's say over the next 5 years, Bitcoin fails and goes to zero. In that case, the Bitcoin bond would mature being worth $100 billion or 0% APY. The Social Security Fund would experience no loss at all, as it would be paid back from its US Treasury debt position, the original $100 billion it lent into the product. Now let's say Bitcoin doesn't go to zero, but it does do something unprecedented. It goes down in price by 50% over the next 5 years. In this case, the Bitcoin bond upon maturity will be worth $110 billion, which is equivalent to the bond paying 2% APY. Finally, let's say Bitcoin price simply stays the same and did not appreciate over the 5-year period. The bond would mature at a value of $120 billion, which is equivalent to 4% APY. Okay, those are the doomsday scenarios. Let's get back to the higher probability scenarios based on Bitcoin's past performance. If Bitcoin price doubles over this 5-year period, the Bitcoin bond would mature at a value of $140 billion, which is the equivalent to 8% APY. If in 5 years the Bitcoin price went up 5x from today, the bond would mature at a value of $200 billion, which is equivalent to 20% APY. If Bitcoin continues its 60% compounding annual growth rate, the price 5 years from now will be 10 times higher from today. The Bitcoin bond would mature at a value of $300 billion, which is equivalent to 40% APY. In 2023, the effective interest rate of the Social Security funds combined was 2.4% APY. As you can recall from our price performance projections, the current 2.4% APY rate barely beats the doomsday scenario of Bitcoin price dropping 50%, which still produces 2% APY. Even if the Bitcoin price just stays the same, the bond would mature at 4% APY. That's almost double the Social Security Fund's 2023 performance. If Bitcoin continues as an emerging digital asset class, the bond would be producing at a rate that is anywhere from 10 to 20 times more profitable than the Social Security Fund's current holdings. Bitcoin bonds make the best performing asset in the world the source of yield in a low risk, high reward fashion. Even more exciting is the positive feedback loop created by the performance and continued issuance of the Bitcoin bonds. The higher yields of the Bitcoin bonds result in higher demand from the marketplace. Higher demand leads to more Bitcoin bond issuances. More Bitcoin bond issuances create more demand for Bitcoin. More demand for Bitcoin thus pushes up its price and leads to higher yields. The cycle continues to repeat itself, which creates a positive feedback loop, driving massive profit potential for the holders of these Bitcoin bonds, in this case, the Social Security Fund. With Bitcoin bonds, we, the people, have a chance to recapitalize Social Security. Imagine the possibilities of other federal governments, states, and municipal programs also participating in the bond program. We could not only save Social Security, but we could recapitalize the republic. Coupled with fiscal responsibility, reduced spending, fraud, and waste cutting measures, there is no limit to how much we can enhance the state of the union. These United States of America have long led the world. Now is the time to cement our leadership in this new emerging reserve asset of the internet economy. Our country's future and the American way of life depends on it.